So we have to discuss Palantir stock and more specifically, taking some profits or even taking all the money off the table in regards to Palantir. I mean, we have seen massive multi-year gains in Palantir in just under a year, and it looks like it's not about to stop. So it kind of looks like it may be prudent to actually take some money off the table and take some of those gains. So let's kind of discuss that today and kind of get down to what the truth of the matter actually is. Just make sure you like the video if you like getting the truth without the hype, because that's exactly what you're going to get today, guys. That's exactly what we're going to talk about. So a lot of you guys out there are up massively on Palantir, and I know the question. I get it all the time in my group even. Hey, should I sell? Should I trim? Should I take some off the table? Some other things like that. So I'm going to give you guys a long-term buy and hold investor's perspective here. I'm not talking about trading. Another channel may be able to discuss that. Obviously, would be able to discuss that far more intelligently than I could. That's not how I'm coming at this. I'm coming at this from a long-term buy and hold investor's perspective there. So there are essentially 4 key points to the discussion, and I'll let you know 2 scenarios where I absolutely would consider trimming or selling Palantir stock. So we'll talk about both of those here, but let's get into the 4 keys first. So key point number 1 is taking profits or trimming is a trader's move. Look, I'm just trying to be honest here with you guys. You don't ever see Warren Buffett saying, hey, sell here and then rebuy here. It's time to kind of trim some up here and, take some profits there. You just never really hear those from the greats all that much. They don't really discuss doing that. As a matter of fact, you kind of hear the opposite. The biggest regrets that they have and the biggest mistakes that they've made were selling stocks in the first place for, basically taking profits. You can go all the way back to, Warren Buffett back in the day owned 5% of Disney or something like that. And of course, he sold for an incredible gain, but he missed out on like a 40x if he would have held onto the stock or something crazy like that. And he said that's one of his biggest regrets is selling that position, even though he made a massive profit in the meantime. So when you're discussing this as a long-term buy and hold investor's perspective, taking profits, trimming the stock, that is all language used by traders. It is not language used by real long-term buy and hold investors. Now, I'm not saying that you can't have a trading account. And if you're going to do that, we have plenty of group members that do that. They put it in a different account altogether. They don't mix the two in regards to that. So when you're talking about long-term buy and hold investing here, trimming or taking profits is not part of the decision-making matrix in regards to being a long-term buy and hold investor, because you're investing that way because the statistics show you that it's a losing proposition to play that game. You will not do. They've run the simulations. They have not just simulations, but actual studies studying the stock market and actual individual stocks and everything else. And it does not outperform just buy and hold. That's why dead people outperform hedge funds. Statistically, that is the truth. So that right there is kind of key point number 1 as a long-term buy and hold investor when it comes down to these stock processes like trimming or taking profits. So key point number 2, what was your plan? Guys, this is kind of a basic answer here. What was your plan with the stock? I mean, I talk to folks all the time. Oh man, I think Palantir is going to be a $500 stock by 2030. Okay, I'm not willing to extrapolate out that far. But if you truly believe that, why the heck are you trimming and taking profits at, $40 or so? It doesn't make any sense. Even if you believe it's only a $100 stock by then, or even a $75 stock by then, and that's your plan to maybe take profits in, then why are you taking them early like that? So many people don't create a plan to begin with. But then we have a lot of good intention folks that put in the work, they create a plan, and then the moment the stock goes on a run, they don't stick to their plan anymore. They start altering their plan based upon, I don't know, YouTube videos or, somebody on CNBC or articles or whatever the case is, instead of sticking to their plan in the first place. Now, if your plan was to swing trade it or hold it until it got to 40 and then sell it, well, then it makes perfect sense. But you planned that out. It made sense. Maybe you have a something unexpected pop up in your life and you're thinking, hey, even though I love Palantir, it is a little bit overvalued right now, or maybe a lot overvalued, depending upon where you put the value. So maybe you want to take from that in order to pay for that expense. That could be a viable reason and a viable way of doing that as well. But so many folks deviate from their plan just simply because the stock ran up and now they're hearing it's overvalued. So therefore they want to go from a long-term buy and hold investor, which requires patience and time, into a trader thinking, well, I'll get out of it now and then it'll dip down lower later, which of course, lends itself to that's probably going to happen. But when are you going to re-enter? Are you going to buy more shares than you did before? What's your plan with that? And what are you going to do if you re-enter and then the price goes back down? Now, all of a sudden, you had this sweet, nice average. You took all these profits, depending upon your situation, you may or may not owe taxes, but now you bought in and now you're down immediately on that position. Is that going to weigh on you mentally? And are you going to keep playing this game all the way through? I mean, Palantir was really overvalued whenever it ran up to 15 the first time. It got overvalued. And of course, everybody was saying, trade it, take the profits. It's guaranteed to fall back down to these levels. And they threw up all their pretty charts and graphs and all that sort of stuff. Well, it didn't happen. And the same thing was said at 25, at 35, 30, you name it. It doesn't matter when. The point being, the right time to take profits was all these other times along the way. And that might very well have been true. But were you going to actually take profits and then get the entry point right on the back end? I don't know. I mean, sure, it's easy to look back at the chart and go, oh yeah, I definitely would have bought here and sold here and then bought here again and then sold here again and all that sort of stuff. That's why people get lured into trading. In actual practice, it's not that easy. If it was, we'd have trillionaire investors, but we don't have any of those running around, which means it's a heck of a lot harder than whatever the heck you're thinking whenever you look back at a chart. And oh, by the way, even the people with supercomputers and teams of, Harvard MBAs and other Ivy League MBAs and all kinds of other incredibly smart people that are, far smarter than me. And even if you're smarter than those folks, I don't know, a team of 20, 30, 40, 50 of them plus supercomputers is probably smarter. If they can't even beat just holding the stock, I doubt very seriously you're going to get those entry points right and out over and over and over again. Which leads me perfect to point number 3, which is the right time to take profits usually means you left a fortune on the table. Look, I'm not arguing or disagreeing with it might be the right time to quote unquote take profits, if that's your strategy. But think about all the folks who sold Palantir whenever it went on its last run, whenever it finally bumped up over 10 and never came back down again, and big YouTubers. Everybody on CNBC, everybody was saying sell, take your profits, you'll get a chance to buy later, and then the stock rocketed right back up over 20, back to, I think, essentially 25 before you ever came back then. You left a literal fortune on the table by taking profits. And if you were a long-term buy and hold investor like I am, and you want to own a lot of shares of Palantir long-term, now, because you took profits and the stock has come up more, now you have an actual smaller position at a higher price point than you had before. I know folks that missed out on a double up and have half the shares that they used to have because they decided to play these games with the stock whenever it happens. I'm not saying it's going to rocket up to 50 afterwards and you're going to be stuck left trying to pay a higher price or anything else like that. I'm just trying to say that when you play these games, you start thinking you have a feel for it right up until you don't, and that's where you end up smacked, and that's where you end up in a much worse position than you would have been before. Doesn't mean you still won't make money long term, but I much prefer to just share count and build out my share count over time. That's what matters. It's great. If you bought Apple back when I did and you own it for 30 cents a share or something utterly ridiculous like that, hey, that's great. But I bet you if you own 500 shares, yeah, okay, that looks pretty good. But what if you own 5,000? There's a massive difference between those two share counts. But that's what happens whenever you start trimming, you start taking profits along the way. You have a much smaller position than you would have had if you implement the opposite strategy, which is buy on the big dips whenever it gets undervalued. Therefore, my share count has always gone up on Apple. It's only gone down one time, and that one time it went down, I made $600. That was the profit that I took. That $600 profit would be worth more than $1 million today if I just would have held those shares, but I took my profits. It was a good trade. I actually made really good money on it at the time. I thought it was pretty cool. Thought I had a feel for this. Guess what? If I would have just held the dumb things instead of trading them, I would have had more than $1 million more in my account today. That is the reality of the opportunity cost lost by playing these various games, because sooner or later you're going to get burned and you're going to end up with less shares than you had before. The only way you end up with less shares is if you sell, you listen to Wall Street, you let them scare you out of positions. Instead, I prefer to do the opposite. I continue to add to Palantir. You had chances this year to add to Palantir in the teens. Just a few months ago, you could add at $20 or so per share. I know, I did it. I bought at that particular level, and all it did was make my share count even larger. So this latest run, yeah, it's probably overvalued, but that's okay. I have more shares, therefore meaning I'm benefiting even more than somebody else who tried to play trading games along the way. I am much further ahead, and that share count is what matters in the end. And I can assure you, if Palantir goes to that price we think it is in the future, whether that's $90, $100, or even that $500 mark some people like to throw out there, I'm not saying it's going there or anything else like that. But if it happens to go there, man, I want as many shares as possible, not playing games along the way, trying to trade myself there, because you're not going to win that game. One of the hardest things with investing is picking a great company. But what's actually harder than that is trading in and out of it over the long run. It's statistically impossible to do, but yet some folks absolutely crush it. They choose the right company. They choose a company like Palantir that you can clearly see is going to do great things in the future and is growing and is super sticky, has a giant moat, has a lot of things that you want. I mean, you have a great company there, but then you want to kind of do the even harder thing, which is trade in and out of it, therefore making your job almost impossible in the end, as opposed to just buying and holding. I've done it before. I have trimmed, took profits, and it cost me a fortune, and I don't want you guys to fall into that trap either. And point number 4, percent you are up has nothing to do with valuation. Now, I'm not disagreeing that it is overvalued for sure, but anytime somebody tries to tell me they want to trade out of stock because they're up 100%, okay, that has nothing to do with whether it's overvalued or not. That has everything to do with just how much you're up right now. Now, as a trader, maybe you're thinking, hey, I want to make X amount and then get out. But a lot of folks will exit out of a great long-term position because it's doubled up. And I'm like, okay, but that has nothing to do with valuation. There's plenty of times whenever, and I'm not saying this is the case right now with Palantir, but it's a mistake that people make. You know, when you bought Meta in the 80s, hey, it ran up to 160 and a lot of folks cashed out because, oh my gosh, it more than doubled in, just a few months. I've got to get out of the stock. It's overvalued now. No, it's not. It was still significantly undervalued and you should have been adding instead of selling. Now, I know all the charts and everything else said it was, the right time to sell. Maybe so. That's what traders do. But it had nothing to do with valuation. But a lot of folks like to correlate the percentage they're up on a gain on a stock as a reflection of the valuation. Sometimes that is true. Sometimes it is absolutely not true. And you've got to be able to distinguish the two. So don't fall for that narrative whenever you hear it to get out of a stock because it's run up X amount of percent this year. The amount it's up in a year has zero to do with valuation. Now, they may end up correlating, but that correlation is not the causation. It is overvalued based upon actually doing a valuation. Has zero to do with the percent up. It's not in the formula, and I've never heard anybody say, oh, whenever you're calculating valuation, make sure you look at how much percent it's up this year. That'll give you an insight as to whether it's overvalued or not. Never heard that. It's total garbage. But yet, I hear people say it all the time, so make sure you're not doing. But having said all this, guys, there are 2 scenarios where I would absolutely consider selling a stock that is on an incredible run like Palantir's on. So let's discuss those next because it's not totally out of the realm of possibility to sell a particular stock for a specific reason. So I'm going to give you guys my opinion on when I would do it. That's all I can speak for. Obviously, there are other reasons to do it as well, but these are the main 2 that I look at. So number 1, it's a low conviction play or a stock gets caught in a giant hype run. Now, whenever I'm buying stocks, there are sometimes that I buy a stock, I'm excited about it, but I won't say necessarily sour on it, but I just kind of like, I'm not really happy with the execution, or they're not executing at all, but the stock goes on a run anyways. A lot of times those are telltale signs that you might very well need to take your profits and get out of that particular stock because you don't really have that conviction into it. I don't want to own that stock long term. Management is not executing up to against the expectations they are, expected to meet or what they've said that they meet. And of course, Wall Street gets dumb, right? They run up stupid stuff all the time that are useless or worthless and sometimes run, and great stocks are sitting there screaming undervalued and Wall Street wants nothing to do with them. And that's just kind of the game of Wall Street. I'm not here to try to explain why stocks run and why stocks don't and things of that nature. I just know they will always come back down to those fundamentals in the end. And whenever a stock that where the fundamentals are getting worse, or I just have low conviction on, or maybe they're just kind of they're kind of medium, but then it goes on a really good run. Hey, at that stage, I see, in my opinion, I might very well sell that stock and move on to another one. Now, I'm not going to sit there and watch the stock and see what happens. And is it going to go higher? Probably, because you can't time the tops just like you can't time the bottoms. But nonetheless, that's a scenario where it makes sense to me because the fundamentals have gotten worse, but the company itself is on a nice, good run. So therefore, it can kind of make sense of that. Or just something about the management team. Maybe they're taking a new direction and Wall Street likes it, but I don't like it. That right there could be another thing that, hey, my conviction is a lot lower. I need to move that money into something I feel higher conviction in and that I feel more comfortable owning in the end. So that's kind of the first reason right there. And of course, I can also point to a stock getting caught up in a hype run of some sort, kind of like a Wall Street bets type of deal. This does not happen often. Palantir gets overvalued. It's been overvalued multiple times this year. At any point in time, if you thought you could have sold at that point and then bought again and then sold again, all that sort of stuff. I'm not talking about a stock getting a little bit overvalued. It's not like, here's the fundamentals of the company. This right here is fair value. The stock's going to go overvalued, then undervalued. We're not talking about whenever it gets overvalued. We're talking about these crazy, here's the fundamentals of the company. and it goes way up here. And oh, by the way, it's going to be a dead stock for the next 3 years, 4 years, whatever the case is. That's what I'm talking about there. Or it's a speculative company that just goes on some sort of ridiculous hype run where you're like, man, the amount of revenue and the amount of profits they'd have to spit off would be just, incredible. And they're not even profitable yet. That's the type run I'm talking about there, where it's just they pulled so much of the future into the now that it's not worth owning at that stage because it really is going to be a dead stock for a really long time. Palantir, to me, in my opinion, is not in that situation. If Alex comes back with better guidance and, boost guidance for the next couple of years, Palantir is going to be back in that fair value to undervalue category pretty quick. It's not like Palantir is at $80 today. Okay, we're having a little bit of a different conversation there. $100 today, throw out whatever you want there. Okay, now we're having a much different conversation. But for me, right now at this level, even though, yes, I believe it's overvalued and, running really, really hot, it's not this crazy overvalued amount to where I feel like I've pulled years worth of the stock into the future and I need to start playing trading games with it. But stocks do have that happen to them from time to time. And when that scenario comes, it's definitely worth considering. I mean, maybe for you, it's only a $20 stock and now you're sitting it up over 40. Okay, then that can make sense. I have the valuation obviously a lot higher than that. So for me, it doesn't make a whole lot of sense. But that is scenarios, and I try to give you more extreme scenarios just so that way you kind of see it to where it makes sense to sell a stock at that stage. And yeah, if we're talking about Palantir at 80 by the end of the year here, and Alex has just maintained guidance, and there's nothing, justifying that particular price outside of the fact that, I don't know, it's just where Wall Street wants to push it. Okay, maybe we're having a different discussion, and I'm definitely considering it at that time. But where we're at right now, for me personally, it's not something I'm considering. And number two, something fundamentally changed with the stock. This right here is the biggest reason to sell in my mind, is when something actually fundamentally changes where the business itself is going to change. We're talking regulation change here, a massive turnover in management. Alex Karp leaves and takes out his top 5 executives with him. Something of that nature is a fundamental change to the business. Maybe some regulation comes out that absolutely is going to cripple Palantir's business. All of a sudden, the U.S. government says, hey, we're not going to do business with Palantir anymore. Congress just rewrote a law and we're going to get rid of, all the government contracts that fall into a lot of the different categories that Palantir would fall into. That's a fundamental change. That shifts the business, and it's something I'm definitely would move away from Palantir pretty quickly at that stage because there was a fundamental change with the business. Alex Karp banging the table? Sorry, it's not a fundamental change with the business, although a lot of folks felt the need to sell out at that stage instead of add more on that because he banged the table. Same thing, stock gets a little bit overvalued. That's not a fundamental change to the business. Oh my gosh, Palantir had a slow quarter. That's not a fundamental change with the business. Now, 2 or 3 quarters worth of slowing. Okay, we got a problem there. Something else happening. Okay, that can make sense at that stage. If I don't see fundamental changes, it's not something I'm going to overreact to just based upon Wall Street said this or this article said that or this person speculating this way or whatever the case is. Those are not fundamental changes. Something that fundamentally changes how the business operates and will impact those revenues and profits over the long term. That's a fundamental change, and that right there would have me selling out of the stock. And if a lot of the concepts we talked about today are really, really hard to kind of get at, I know valuation isn't easy. Obviously, just being able to just cool your nerves isn't necessarily easy. Understanding how to analyze these particular situations on a lot of different stocks. Make sure you check out the pinned comment for my group where you get 5 free courses, you get free coaching, you get access to me anytime you want. We get the best 6, 7, and 8-figure Discord there with a whole bunch of folks helping you with the truth without the hype. We don't get into the hype trains and anything else in there, guys. We keep it real in there, both bull and bear in regards to the stock market. So make sure you check out the pinned comment, see if a membership's right for you, because if you lasted this long in the video, I may have left something special in there for you. And click this video here if you want to see exactly what I'm buying in this market, and click here to see my exact plan for this market. So thanks for watching, and we'll see you in the next one.